G'day, Johnny Seville from Acorn Wealth Corp Smart Money Trading. Now, a few weeks ago, we shared a deep value case study on Under Armour, which is ticker UAA. So today I want to walk you through what has happened since we shared that alert. Now, this was from our Smart Surge scan. It's a Smart Surge setup with a lot of other interesting things going on. On that note, of course, we'll be diving into this in deep format, as well as others that we're watching, how we find them and how it fits into how we're playing the overall market, with some big moves happening from the smart money behind the scenes. So if you haven't already registered, I will hyperlink you to the link at the end of the presentation. Now, let's start with this. So to begin with, there was over $220 million of insider cash purchases that we had that has happened in UAA from one of a well-respected value investors, perhaps one of the most respected value investors in the world. So we'll look at what the charts are telling us and what we're doing with our position. So again, full disclosure, this is something I hold both stock and options in. Now, let's recap the original thesis. When we first flagged UAA in mid-January, the stock was trading around the $5 range. From a smart money perspective, what we had seen was V. Prem Watsa, chairman of Fairfax Financial, who had deployed over $140 million at the time, and that has since increased to about $220 million into open market cash purchases. He's been often referred to as the Warren Buffett of Canada. So this wasn't stock options or compensation, it was real money on the table. And while insider buying doesn't guarantee a stock's going to go up, or insider selling doesn't guarantee a stock will go down, it's certainly a key thing that I'm looking for to add that extra probability that those who know the company best are seeing the stock is undervalued, and you'd expect it to go higher. So what's happened since then? Well, since we shared this in mid-January, we've seen a terrific move. The UAA has moved from 576 area to recent trading of approximately, I think it was $7.07 last time I looked at it before starting this recording. So roughly a 23% move in under a month. So the stock briefly hit resistance around 794 before pulling back, and that pullback is actually an interesting part of the story right now. So let's take a look at this in the broader market context. So UAA has significantly outperformed both the consumer discretionary ETF and the broader S&P 500. So this outperformance is notable, especially considering it's one of the most heavily shorted stocks in the consumer discretionary space. And this is combines a short squeeze opportunity with insider buying and the timing mechanism, which of course was the Smart Surge. So this is again, I'm not suggesting you go and buy this or that you should have originally, but this is certainly what I've done and what the things that I look for that I want to share my perspective on with you here. So let's look into the daily technicals, because this is ultimately how we found this. I don't have a crystal ball, no one does. So I didn't find this on my own. It was actually by running the Smart Surge scan. This is one of Acorn's gems. And you can see here in the green, these green bars, 1, 2, 3, 4, 5, it might be 5 or 6 days in a row, this had been alerted by the Smart Surge scan. Now, again, we're going to talk a lot about this in the upcoming workshop, which is why you don't want to miss it. The Smart Surge scan said, hey, an aggressive, a powerful breakout may be about to happen. And there it did, lasting through 450 and that $5 range where we had shared it a few times over the last month or two. Now, so basically after all those lower highs and lower lows, the Smart Surge triggered and off it went, breaking through the upper trend line. And that's a structural shift from bearish to bullish on the daily time frame. The weekly time frame tells another angle of the story. So if we look at the weekly chart, this is where it gets arguably more compelling, because we see this multi-year descending channel or downward channel that UAA has bounced off of the bottom of, so not only breaking through that downward channel on the daily, but also structurally in a downward channel on the weekly. And here's that really critical detail of where the first resistance came to play, and that was right there at the 200-week moving average. Right, you can see that right there as it went straight up into it, and that's textbook resistance. And that first test can be a partial profit taking target, especially if you're in options, which I think we're up 50-60% in the ones that I'm in anyway, or even in stock. It depends on how you trade and what your individual risk profile is. But that is textbook resistance, and a first test that often does lead to a healthy pullback. And this brings us to, again, the insider activity, which adds an interesting layer to this technical picture, because the insider buying has been continuous. Watson has accumulated, again, over about 42 million shares over 17 cash purchases, which occurred between December 22nd and January 28th. The largest single day was December 30th. With about 13 million shares at 512, which totaling $67.5 million. So he was buying on the way down and continued buying on the way up, and that would suggest conviction that it isn't dollar or price sensitive. There's a conviction there. One could assume from that type of activity. If you take a look at some of those key transactions sorted from highest to lowest, but beyond Watts's significant purchases, we also had directors Robert Sweeney and Dawn Fitzpatrick, which each bought 100,000 shares in August. So again, when you see major shareholders such as the chairman of the board and directors all buying with cash in the open market, it's a powerful convergence of conviction, and a strong insider signal helps inform a bias of how I use it to perceive fundamental strength and start planning for an entry. And of course, with the smart surge giving us the timing on that, and in fact finding it so that we were even looking at that insider activity in the first place, that then ticks all the boxes. It doesn't guarantee something will go up. So again, even with any position, no matter how much we like it, no matter how much insiders are buying or whatnot, there's still risk management involved. So doing things like partial profit taking on the way up, like I've already done, and adjusting the stop loss as we go to protect remaining capital and profits that have been made. So, with the continued insider accumulation, this strengthens the thesis that we had in the beginning of January. And so I view this recent pullback from the 200-week moving average as a healthy consolidation, but rather as a strong reversal. But it is important, as I said, as with anything, to always manage this with a defined risk framework, and protect in case it did have a stronger pullback, and putting it to exit, protect capital, and put it back on the watch list for a re-entry. So let's quickly recap the main points: deep value conviction, dual channel breakouts, and again, strong insider buying. So I hope you found this valuable. But here's how you take it to the next level. If you found this case study valuable, maybe ever since we first shared it with you in January, along with many others, we're going to be diving deep into these in the upcoming live event. It's full of actionable insights, and we're going to be talking about where the smart money is moving and how we're playing it from an individual stock standpoint, but also in strategy in general, from trades to scans. So I'll hyperlink you to the registration page. Click the link on the screen, and I can't wait to see you there live. Happening soon, so take action now.